Here now to help discuss Bullseye Brief founder and author Adam Johnson, UBS Wealth Management Senior Portfolio Manager Alan Retschavin, and Flynn Zito Capital Management co-founder Doug Flynn. All right, Alan, I know I messed up the name a little bit.
Great job. Let's
talk about this session. Dow off 307 points. Everything is down. Financials are down the most, 2.28%. It doesn't seem like the Maxine Waters shot across the bow should have been news. But perhaps it underscores the fact that the Democrats are coming to unmantle President Trump's economic agenda.
Look, the economy has done incredibly well. And part of that is based on a promise of less regulation. It's been based on the taxation. And it's based on the earnings, which have shown themselves to be quite robust. So when somebody throws a wrench into that works, yeah, it makes people nervous. But it's prudent to be positive because this economy is extremely strong. And hopefully it can maintain that if people don't mess it up.
But it got strong in part because regulatory pressures were removed, because we had lower taxes, and because business felt, okay, the coast is clear. After a decade, we can start to make investments where we won't be punished for making money.
I think that's right. I think that neither the Democrats nor the Republicans want to interfere with how good the economy is doing. However, if the politics takes over and people start to do things that goes against what are making the business owners so proud, what is making America feel so good, that can be self-fulfilling.
Of course, and just moments ago, Neil pointing out another Democrat saying, hey, not too fast even on this new trade deal, USMCA. So, a deal that you would think Democrats would love. It's really great for union workers. It's great for American workers. Even going so far as to politicize that sort of goes against what Alan just said, that maybe politics maybe they come before the American economy for some politicians.
Well, nobody certainly on the Democratic side wants to give Mr. Trump any credit in the same way that nobody in the Do-Nothing Congress back when, that was an issue several years ago, wanted to give President Obama.
Well, it's not about credit, though. I mean, just about the idea that would you be willing to derail this as a politician?
Look, if there's one thing that we've learned over the past year, it's that everybody has a voice in social media. And arguably, the president getting right out there on Twitter and tweeting more than most probably lets other politicians know they, too, have a voice. So they want to be heard. Now you got a new class coming in. There's a leadership switch, and they're going to put it out there.
Doug, I don't mind the voice, but they have more than a voice, right? They have position. The Democrats have the House, and if anything's going to get done, it's going to mean some form of compromise. But if it means also dismantling the key parts of this economic revival, it seems suicidal to me.
I mean, they have to make themselves worthy or peer worthy to their base, that they're doing some kind of a job that they were set there to do. But in reality, the setup is actually a divided government situation, which is not the worst scenario under Republican leadership. So I think it could bode well that maybe you do get some things done if they could just figure out some way to compromise in some fashion,
right, guys,
instead of just obstructing.
And remember, by the way, just as you have a House banking committee, there is a Senate Finance Committee. One's Democratic, one's Republican. So that's the gridlock you're talking about.
Exactly.
Let's talk about this new tenor of the market. Alan, sell the rally seems to be what most investors are doing these days. Although I will say yesterday by the close, I saw some interesting things. I saw up volume. I saw the volume indicate maybe there was more conviction amongst the buyers, because it was better up volume than down volume. But today we're down another 300 points. We've made a 500-point reversal to the downside.
Yeah. My dad started in this business over 50 years ago. And the one thing I've found is that if you stick to the fundamentals, if you see what's going on in the economy, you do all right. If you prudently invest.
But what are the fundamentals? Because Apple Computer arguably is probably trading now at a 14.4 PE.
Right.
Tremendous company, hordes of cash, market share leader. Could you argue fundamentally that's a stock you want to own, even though it's getting hammered? Let me get Alan in here because he brought up fundamentals, and then we'll ask you.
All right.
Yeah. So I think you have to look at the fundamentals of each company you're going to invest in. And right now at UBS, we are devoting money to equities, within the context of people's risk profiles. That said, this can be self-fulfilling. If you start to focus on the negatives, you can change the atmosphere of the market. One of the things that we've discovered is that CEOs are very happy right now. They're very positive. They're very positive with the administration, and everything the administration's been doing has led to great things in the markets. But that said, if you start focusing on the negatives, it can be an animal spirit shift.
I think that's a great point. We saw it with Home Depot yesterday. We saw it with Macy's today, up. Everything looked great, but the stock starts selling off.
Yeah.
Yeah, and you look at a company like 3M saying they're going to go out and buy $10 billion of stock. I mean, talk about a confident CEO. You mentioned Apple, and just what I wanted to try to get in there, and sorry to interrupt you there, Alan. Apple's changing the business model, right? They told us they're going to stop giving handset counts, and they want us as investors to focus more on subscription revenues. That never sits well with anyone. I think that's what's going on with Apple. It's kind of its own thing. And as far as the banks go, you've now got a Goldman trading at 8 times, JP Morgan and Bank of America trading at 10 times, and about, call it 1.3, 1.4 times book. That's a trend.
jump off the Apple
you can make the argument that it's been cheap all year long, though, right? That doesn't mean that you're not down in the stock right now. So it got cheaper, but why do these stocks keep getting cheaper?
The problem is that not only did people own Apple, but they probably owned it as one of the biggest positions in every single mutual fund they had. They're completely focused on large growth. That's what's been running the market. Even though other areas have been weak for a while, it's been masked by the fact that the FANG stocks and Apple have kept going. Well, now it's starting to settle down, and people realize just how overexposed they may be in a stock like that. And it could be well priced, but you might just have so much of it that's probably the biggest problem, is that you're not as diversified as you thought you were, and you can tell when you look at your statement from last month.
Right, well, in the overall market, too. I mean, Apple, 12.5% in NASDAQ, 5.2% in the Dow, 5.3% of the S&P. So, obviously, one name so critically important to the market. When it's going straight up, it's wonderful. When it's going straight down, it scares the heck out of you. You mentioned UBS asking clients to buy equities. Are you looking at specific companies, or are you looking at sectors?
So we have a general approach that the equity markets have a positive environment right now. And it will depend on what your allocation is. Obviously, you want to have a diversified portfolio because you have to be able to withstand these vulnerabilities. Because you can have things go off the rails because people are politicking.
But if you're diversified today, every single sector is down, so it doesn't really necessarily matter.
Although the market's up on the year. And so we can focus on the positive. The market is up on the year right now.
I love a man that focuses on the positive. All three of you guys, by the way, did. But thank you very much. We'll bring you back in a moment. Adam, Doug, and Alan.